Hey, Paul, why don't we just start out with give maybe adding a little bit of your voice to that journey from Iowa State all the way to where you are today and everything between.
Yeah, that was a wild trip I did not see coming. So I didn't set out to do much of that. I did want to work for Boeing, so I was deterministic there in the beginning. I liked writing code, and at the time that seemed like interesting code to write. And Boeing wanted to disrupt everything they did about aircraft design with software. But then when the internet came along, from that point, from when I got my master's degree and started talking to people about jobs during Internet 1.0, almost nothing about my career has been my idea since then. So it's all been stuff that was thrown at me, opportunities that I was prepared to say yes to. The other thing I love to make sure that I mention that's color. I can't put it in the writing on the bios, but I took opportunities that played out extraordinarily badly as well, that you won't see in the bio, like when I was in financial planning for a bank, or when I was in the strategic planning group at Washington Mutual, a top 10 U.S. bank at the time. And although career-wise I drowned in both of those roles, I learned things that made the rest of my career much, much better. It made me much, much stronger when I went back to my sort of neutral roles. So I'm just saying, don't be afraid to take chances on decisions. I still feel good about even doing the ones that failed badly.
Was there kind of a North Star that kind of guided you kind of as a common thread, or just a North Star that helped you make decisions along the way?
Um, I wanted to do a couple things. One, I wanted a place where I felt really, really motivated to just work my ass off, right? Not because somebody was cracking a whip on me, because that's not how I'm motivated. Some people want a whip cracked, that's not me. I want to be so excited about something that I wanted to just work day and night, through the weekends, don't even know that it's Saturday and Sunday. And I wanted to be excited enough about something that I was intrinsically motivated to do that, because that's what makes me work hard. And then I wanted to be in a place where I would learn a lot. So I always wanted to have great mentors around me that I could continue to learn and grow from. And so, even when I was CMO at companies, I wanted the rest of the executive team and the board and the CEOs to be people that I was going to learn a lot by working with.
All right. So I guess diving into it, if I'm a student, how can I learn from this Paul guy? So for students out there that have, Stanford students have a lot of options. So those that are deciding, hey, should I go the startup route right out of school? Should I go the big company route? You've kind of had breadths of air in those spaces. How would you help a student? How would you advise a student on that?
Yeah, it's interesting. So I went big company first at Boeing, and I was working on products that I was very excited about, loved my work. I had spectacular mentors in engineers, typically, that had been at Boeing for 20 years or better, helping bring me along and putting up with my foolishness, really, and just sort of like gentle guiding hands, which was perfect for me and perfect for where I was starting out. To contrast that, I want to try to give a little bit of the character of each, because I think the most important thing is finding the environment where you will be comfortable and where you will be inspired to work really, really hard and learn. And that's different for different people. And so in contrast, when I went to the first startup, extremely high visibility, extremely broad scope of work, doing a lot of things that nobody had ever done before. So there was nobody to learn some of those things from. I was learning other things from those people, but by that point in my career, I was ready for that, and I was fine. I would not have been straight out of college, but that's me. And I've seen people straight out of college go into that sort of, here, we're going to dump a ton of responsibility, and the fate of the company might be sort of hanging on you in some aspects. And some people are just fine with that straight out of college. I would not have been. And so I would say really, look at your own personal characteristics. Companies are just like people. They have moods. They're aggressive or less aggressive. They're humble or proud. They're hard driving, or they set realistic goals and then blow them out of the water. they all have their own style. That some of them value quality of life. Some of them don't think about quality of life because they're just so hard driving at the work. And they're all fine, just like people. Just like all people are different, they're all fine. One's not better than another, but I would encourage you to find one that matches your own personality. And again, where you'll be motivated to work really hard and be surrounded by people, in particular your manager. Your manager is your number one mentor. And so whoever you're going to report directly to should be somebody that you feel like you can learn an awful lot from. If you meet those two conditions, I kind of don't care, big company, little company, you know?
Now, career trajectory-wise, if someone's considering a startup versus a big company, is there, I don't know, one of those two that's going to kind of position them better going forward, no matter what direction they want to go in?
Well, if you absolutely, yeah, I mean, you should think about those things. If you absolutely want to be a founder at a startup, and your goal is to be the best founder you can as fast as possible, you'd probably be better off going into a startup environment. It might be really hard to find one where you have a great mentor and where you can have this great scope of work and learn. And so that would be your challenge if you were going to try to go down that path. But experiencing and going through, I call it the ride, right? I think of it like a roller coaster. Going through that experience of an extremely rapidly growing company where you're interviewing every day, where you've been there 6 months, and that's longer than half the people at the company every 6 months, is a valuable experience in and of itself. And if you're going to start your own startup and really ramp it hard like that, seeing that firsthand has quite a bit of value. And so if your goal is start your own as fast as humanly possible, that might be the way to do it, as fast as humanly possible. There might be some argument to, really learning deep in your space at a larger company and getting better mentors before you go do that. It ultimately might have you have a better foundation underneath you. But at the end of the day, again, you can kind of go either direction. I would go where you're comfortable, and then supplement. So if you're at a little startup first, supplement with some structure from big company that hopefully you can get outside of work hours. If you're at a great big company, supplement with some structured time at the Agile Marketing Meetup or other meetups appropriate to your discipline, where you can learn about startup and you can see entrepreneurs starting businesses and get deep in there with them. You might even be able to help one on nights or weekends or something. And so I would hedge my bets both ways myself, just to try to be learning faster.
So if someone is considering working at a startup, what are some things that should be like top of mind for them as they're saying, kind of, is this a place to be? Like, what are some things, almost like a checklist of, here's the items you really might want to have in mind about a place before you really jump on board?
Yep. Well, so for me, and I think it's a pretty broad list that a lot of people could apply. I had to feel good about what the company was doing. Like, if the company succeeded, I would be proud that I helped it succeed. I had to feel personally good about it. And that was my very first and foremost rule, right? And then, gotta love the people. You gotta feel like you're walking into a place. Some people have this beer criteria, I don't know if you've ever heard it, but where they say you have to feel like you could go have a beer after work with, the whole team. I don't believe that, and I've hired lots of people that don't drink, especially, that I loved working with. My criteria was this: if I walked into the office on Monday morning, right after a great weekend, and the first person I saw when I opened the door was this one, am I happy about being at work? That doesn't mean it's somebody I have to be happy going having a beer with. It's different. It's work. It's not beer. But I would always apply that criteria as well. I would want my team and certainly my manager to be somebody where when I got to work and opened the door on Monday morning, I'm excited about being there. Don't hang up on salary is a big, like, if you look at your total lifetime earnings, your salary at the beginning has almost no impact. And particularly if you learn a ton and position yourself for a higher salary later, foregoing some salary early can really pay a huge dividend later. So think about it as area under the curve, not this year's salary per se. At the same time, you should get paid market rate. You know, if you're not, you're undervaluing yourself. I have no problem trading salary for equity, as long as it's, again, a market rate trade. That's fine. What else am I looking for? Somebody I can learn from. That manager that you report to particularly is a big deal. You really are going to need to learn a lot from them in your first position particularly.
So now flipping back to big company, and really even specific to Boeing. I know it's been a while for you, but you were there. So there are some students here that are considering Boeing. So what was it like there? Maybe some pros and some cons.
I mean, for me, it was great. I was surrounded by a lot of really sort of calm, mature, veteran engineers that were, like, their career was set, like, and they were tracked, and they were just sort of, they weren't competing with me to get ahead. And for me, this was important, right? So now some people thrive on competition, and they might want a dog-eat-dog environment where everybody's trying to get the next level position, and you either are promoted or thrown out, right? That would have been horrendous for me. I would have had a breakdown or something. And so I got in this very supportive environment where I had very calm folks that it wasn't about competition at all. We were all sort of working for a common goal together on that exact same team all the time. And for me, that's what I needed. But again, everybody's different, and every company has its own personality, and there's nothing wrong with any of them. You were looking for negatives?
Or things that were a little harder maybe there?
Yeah, sure. You know, I got to a point, I was there for 7 years, and I got to a point where I was sort of on the fast track of an engineer there for 7 years, 7 years into their career. But I was looking out at my friends that had been at startups for 7 years, and it's like they had lived a lifetime beyond mine. The scope of responsibility and the pace of company movement were just very different for my friends that had gone startup versus me going to this big company that was very slow moving corporately, new project every year or two, you know what I mean? And so sometimes I feel like my pace of learning was slower, and it made me a little bit more of a late bloomer in my big picture career.
Interesting. Got it. Now, kind of along the same lines of just this decision of where to work, what factors do you think are overemphasized and also underemphasized when students, say at Stanford, are looking into job opportunities?
Yeah, I mean, I touched on pay to some degree already. Especially first job out. I mean, you want to get paid market, because pay can become an anchor that sets your trajectory, and if you go too far below market, you might have a hard time ever getting very far above market, as opposed to just sort of starting way too far below and then getting up to market. So you just want to start market. That's fine, but going for top dollar, sometimes I see people doing, and I'm like, you're kind of crazy to worry about top dollar when the delta between market and top dollar is so small when you're first out of school. And similarly, I see a lot of people, if you ever want to be a startup founder again, maintain your very low personal burn rate college sort of lifestyle as much as you can on the expenses side of your world, because you're going to have to be lean if you're doing your own company at some point, and it's hard to go backwards once you get sort of soft. Yeah.
Cool. So make sure you're saving money along the way.
Well, yeah, I just wouldn't go out and blow it. I wouldn't overextend myself. I wouldn't get myself into a place where I have a large regular debt payment that I have to accommodate, because that requires you to have a larger burn. And if you're going to try to found your own company, you're going to be pretty dirt poor for a little while. And you need to be comfortable there.
So driving up 280 every day to the farm here in Palo Alto, I definitely see mostly Priuses and Teslas. So it sounds like go for the Prius early, Tesla later.
Yeah, exactly. You'll get the Tesla later. Don't worry.
Okay. So Paul, like you have, I think, a real interesting perspective on being at where you sit now, at like what's coming up next. So really want to get your take for students that are like, what would be a good kind of like, there's a lot of big companies. So what's a good big company that's, I guess, doing kind of good work that you'd be like, that might be not a bad place to work at. And I'd like to get your take on this kind of what's coming up next, not only for big company, but startup as well. Ones that are like, hey, you may want to keep an eye on these guys.
Oh man, well, I mean, the big companies that I would personally be excited about working at are sort of all the usual suspects, you know. I'd be really excited about like leaving school and going to Google or Facebook. Um, maybe Apple, but Apple works a little bit differently. And for my particular skill set, I don't know that Apple would be a fun home for me. But for other people, again, it might be fine. But I like these aggressive companies that are trying to accomplish a lot. It's places like that I feel like I would be inspired to move fast and learn faster. And again, pace of learning in the beginning is going to set so much of your eventual long-term top end. Up-and-coming companies, man. Okay, so another thing, whether you want to start a startup yourself or you just want to work in tech, getting that first win on your resume is big. And it's something that can never be taken away from you. And so I might err toward companies that are a little bit later stage and are a little bit lower risk in terms of the likelihood that they're going to win. So for instance, once NextCard was on my resume, it could never be taken away from me, right? I worked for a tech company that IPO'd during 1.0. It was always going to be there. Any tech company that was aspiring to do similar sort of growth or IPO or whatever later was going to look for people that had that experience before and was going to favor those people in their hiring and in who they picked to interview. And so once I have that line on my resume, it sort of makes it's almost unfair, right? It almost makes it easier to get it on there a second time. Because now everybody wants somebody that's done it before. Even if your role is relatively minor, like I was saying a little bit earlier, you can't underestimate the value of having experienced it firsthand and been in there in a front row seat. I wasn't running NextCard by any means, but I saw the people that did, and I learned so much from watching that experience, and it was really valuable to everybody who hired me afterwards. So that's sort of a hint, if you will, or a sneaky trick, is to pick, if you are going to go startup, to pick something a little bit later stage. It's a little bit lower risk, like maybe a just post B round company or even a just post C round company. Little tiny startups don't love recent college grads anyway, typically, because the training time is a little bit long, and that's fine. That's totally fine. And the training time is a little bit long, and they don't actually have time to mentor and manage anyway, so they're not always the greatest choice straight out of school. But so one of my neighbors down the street, who's a Stanford student, is going to Uber, and I was very excited for him doing that. He's going to get a great experience that will benefit his career. Even 20 years from now, that Uber experience will still be a benefit. It'll be the first line on his resume. Nobody can ever take it away from him and the experiences that he gets there.
Awesome. And so that would be his first win potentially there. For you, like,
it's already sort of a win, right?
Yeah,
it's almost cheating. It's almost cheating, but like from a career architecture perspective, it's like there's something to be said for cheating.
Are there any other startups you might point to, since we did the big companies now? Are there any startups you might say, it sounds like Uber would be one of them, that are like, those might be interesting places to check out?
I mean, honestly, I would go to the people who are funding the B rounds, like the Founders Funds, the Andreessen Horowitz, the Excels, the Greylocks, and just look at who they've funded recently. And again, which one resonates with you? Mm-hmm. But to find like a target list, like those guys are putting big checks down on companies that they're pretty far along and that they believe are cranking out revenue and printing money, and so there's a good chance that they can evaluate success rates better than you or I, right? But, and so I would just go look at who they've funded and see, of the ones they've funded, with B or better rounds or something? What resonates with you? What one gets you excited? And target those suckers.
Got it. So changing gears a little bit to some stuff going on in the news today. So Mark Cuban recently came out with a blog post on kind of the tech bubble, as he calls it, that we're in, and when it pops, how it's going to be a lot worse than when the first one popped. So I want to get your take and your thoughts on that.
Yeah, it'll be interesting for sure. There's definitely a bubble in some spaces, but it's a very different market than 1999 and 2000. We call them seed rounds now, right? 400 new venture capital funds have popped up that are less than $100 million, and they're doing mostly seed rounds like $1.5 million of capital. But we can accomplish more with that $1.5 million than we could with $5 million in 1999. We're starting, in some ways, we're starting further along than where those companies were after they spent the $5 million. The tech architecture is easier, it's faster. You don't have to buy servers anymore. You sign up for them and rent them. It's just much faster to get things built and going with a lot less money than ever before. So to some degree, when you see these big A rounds with big valuations, it's because there were so many seed companies started with much smaller amounts of money. And think about A rounds as a supply and demand thing, right? The supply of seed stage companies vying for A rounds just went way up in the last 3 or 4 years. And so now they're all fighting for a limited supply of A rounds, if you will. I used supply twice, but I think you know where I was going. And so the people writing A round checks are sitting back and going, well, let's just see who gets the furthest. And so the companies that are getting the furthest, they probably are worth more than those companies from 5 years ago that were getting $5 million A rounds. So if they're getting $8 million A rounds today on $30 million valuations instead of $5 million on 25 years ago, there might be some basis for that. So in the early stage phase of the world, I think there are market dynamics that make me go, I'm not so sure. Another vantage point that I have is Subtraction Capital invests in both Salt Lake City and Silicon Valley. And everybody, especially Mark Cuban, actually talks about how overpriced Silicon Valley is and overheated it is. And there are advantages and disadvantages to both, and the investments in both. And there are good values and overpriced things in both markets as well. And so I think there are just so many companies in Silicon Valley, and the media tends to focus and hype the ones that get the highest valuations. Really, there's a distribution of people getting funding at different prices. It's not sexy to talk about the one that got a perfectly sane, normal valuation on the round. And so the media chooses to focus on those. In the later stage, something else is going on. Sorry if there's a long-winded answer, but in the later stage, companies like T. Rowe Price and the BlackRocks of the world, they kind of got burned, in my opinion, when there was a long IPO drought, right? Nobody was IPOing forever, and by the time the Facebooks and the Twitters did IPO, they had huge valuations. And whereas historically people would IPO and then their price would continue to track up really well, they IPO'd and it's like, wait, they already did all their growth while they were private during the IPO drought. But the BlackRocks and the T. Rowe's, in my opinion, looked at it and said, wait, we missed out on all the growth. Like, we can't invest in these companies post-IPO and get the same kind of multiples that we were getting 5 years ago or 7 years ago. So we're going to move down, and we're going to invest in more late-stage companies because that's where all the growth is happening now. And at the same time they were doing that, the firms that had invested in those same companies just had huge distributions that they were handing back to their limited partners, the investors in venture capital funds. And they're not stupid, right? They've been doing this for a while. They know what they're doing. So they hand them back $10 million, and they say, hey, we're going to start a new fund. You want to put 5 of that back into our new fund? And their new funds were much, much bigger than the ones that they used to fund those companies last time. So they ended up with bigger mountains of money and the same number of people to manage those mountains of money. And so they moved up into the later stage. So you have the post-IPO companies moving down, and the big VC firms that had the big wins from IPOs moving up, and you now have two really colossal sharks in one pretty good sized pond, but not big enough for the two of those. And valuations have taken off, and I would agree, truly gotten frothy in that space. Now what's going to happen is we're going to have a bunch of IPOs where the market cap is lower than these late stage raise rounds, or lower or not as low. Now most of these big investments had sort of liquidation preferences and other terms that will make them sort of get made whole at IPO time. And so everybody else will get diluted more because of that. But in the end, they just won't make a lot of money on some of those late stage investments where there was a lot of competition for it. Does that make sense? Long answer, sorry.
No, totally. I'm just curious where subtraction capital falls into play. Like, at what stage do you guys come in?
We're early, so we're a first fund, relatively small compared to all these folks. We're only 2 years old as a company, and so we've invested in the seed and A round space. We're also a little bit unusual in that we're trying to be sort of old school venture capital, and in the old days, somebody made an investment in your company, and they'd show up and work like at your facility with you, roll up their sleeves, and actually just do work for half a day. And so we only wanted to have a limited number of investments in the portfolio because if we get too many, we can't spend any time with them. So we end up being seed and early stage, seed and A round, early stage.
And so we got a lot of students that are super bright and have some great ideas. So I'm sure you hear a lot of ideas often. So how do you identify between kind of a good idea, really worth pursuing, versus an idea that maybe seems good but really not worth pursuing?
Yeah. So interestingly, the same criteria I was just telling people to choosing a place to work, I pretty much apply to companies. We say that we want to invest in companies that we would like to work for. That's the simple, concise way to put it, but somewhat ambiguous. So I'll get a little bit more clarity there. One, we're going to work for them, and we want to enjoy our work. We want to enjoy going to work every day. And so if I roll into Look Sharp on Tuesday afternoons, which is usually what I do Tuesday afternoons, everybody in that company meets my Monday morning criteria that I just went over. I'm excited about seeing all of them. I'm excited about being at work. And I just have so much fun working with those people. On top of that, I'm just going to keep going with this example if it's okay. But so Look Sharp is trying to disrupt actually campus recruiting generally, both for internships and for new college jobs. It's something that I believe in to my core. That I think if I do good work there and help them do a good job of that, every student across every college, across not just America, eventually the world, will benefit and have a better career launch and do better work. All the companies in the world will benefit because they're getting a better workforce in. There's just huge, for me, societal motivation for me to participate and work at that company and work for that company. They're competing in a space that's got the right kind of market players so that their strategy, I think, will be successful. And it's important for me to work at a place where I think I'm going to be successful and my company is going to be successful. They have a big enough market in college recruiting. College recruiting is about an $8 billion market, so even if they disrupt it and turn it into an $800 million market, it's still a meaningful and important market. And so you can see me sort of checking the boxes that I was checking when I was looking for jobs too. And that's how we go.
Can you hear me now? Okay. I can't hear you. I think when you went like this to your mic, maybe you muted it. Is there a mute button there? Oh man. I just lost your audio. Yeah, I can't hear you. I cannot hear you. Dang it. Yeah. Is there a mute button maybe you accidentally hit on yours or? Yeah. It was right when you went like this. How about this? Why don't I like hit a restart on this? Still got a few more questions for you. Okay, so hang tight. I'm gonna stop this broadcast, and then we're gonna pick it up.